Welcome to all of my students in today's mentoring session. Today is 28th of Jan, 9:33 p.m. and we'll be starting this session with the weekly sectoral analysis, and as usual I'll be doing the analysis for Nifty, Banknifty and all of these sectors till the mid cap index. And today's session is going to be special, and all of you who are watching this video on YouTube, kindly watch till the end. Only then you will be able to take some benefit from this particular video, because if you leave the video in between, you will not understand how the market might react in coming days. And do not forget that the volatility has spiked recently, so you would obviously want to understand how markets are going to move. All right, so without a delay, let's start today's educational video. Now, as usual, I'll be starting the analysis with Nifty Futures. Now, what we have over here is the daily chart of Nifty Futures. If we look at the monthly time frame chart, I know it is a lot of trend lines are there, but I just want you to concentrate on this particular 3 to 4 candles, last 3 to 4 candles. All right. So what we can see over here, 1, 2, 3, and 4. So all these 4 candles are basically nothing else but small spinning tops. This one is looking like a shooting star. This one is a shooting star. But if we check properly, all of the candles are basically small in terms of real body. All right. This is what you need to understand. And generally, when we have too many small candles, it clearly means that market is not understanding where it wants to go. Now, if I check the weekly time frame, in the weekly time frame, you can see that I think a couple of weeks back, market was going up pretty nicely. The trend was up, and suddenly market started coming down. So what is happening now is basically the trend is completely flat. Okay, the trend is completely flat. Someone might think that this is a hammer. Let me warn you, my friends, this is not a hammer. This is looking like a hammer. The reason is that this particular wick of the candle should be minimum twice or thrice the size of the real body. So yes, it is trying to bounce. I'm not saying it has bounced. It's trying to bounce in the weekly chart. In the daily, it has already happened. All of us know that. In the weekly chart, it's trying to bounce, but I don't know how successful it will be because the wick is very, very small and the trend is flat. So whatever is happening in the daily time frame. So in the daily time frame, as usual, trend is certainly down. It's not at all up. And I think on this particular day, on 25th of Jan, I had made a video that is there any ray of hope amid volatility? I had clearly told that the market is trading at this support band, and which is still holding on, luckily. So the support band is from 16,950 to in a round figure, 16,950 to 16,800 levels. This 150 point range seems to be a decent support. And we also have a couple of trend lines. One trend line is holding on since, you can see, 22nd of April 2021. And second trend line is a pretty old trend line, which is holding on since 25th of March 2020, just less than 2 years. Okay. So we had this big green candle. Then we had a candle which was looking like a hammer. So possibly a sense of hope developed, and all of the sectors started going up a little bit. But I had clearly warned all of you in that particular video also that it is just going to be a bounce back, nothing else. Because if you check higher, you can see this entire band over here is a very strong resistance for Nifty Futures. This is also what I'd shared in that particular video. If you just go and check on my YouTube channel on 25th of Jan, I've shared this thing also. And the entire band is from 17,400 to 17,722. So this entire 722, yeah. So this entire band is actually a resistance for Nifty Futures. And if you see how precisely today's high is made just below the resistance band, the lower band, it did not even try to surpass this. It could have, but it did not. And exactly from there, we saw a sell-off happening, and big, strong inverted hammer has been built. So overall, someone would say, sir, I have understood all of these now. What is the direction of the market? Let me understand that. So my friends, the direction of the market is, frankly, it is choppy. It is highly volatile. And plus, I'll just share this with you. I'll just plot this ATR. So to be very frank, watching Nifty Futures moving 280 points in a day is very, very normal. If this volatility rises, you will see 300 points, 350 points, 400 points. If the volatility goes up, I'm saying if, not, I'm not saying it will happen. Okay. But one thing I can be very, very sure, even if the Bank Nifty, if you see in Bank Nifty now, the average daily movement is going to be of around 850 points. And that is what you'll have to deal with. Simple as that. So basically, whenever market is locked in a range, the trend is down in the daily chart, that is for sure the prices are below the moving average. But whenever the prices are locked in a range, the range is, current range is from 17,400 to possibly the lower end of this support band, which is 16,800. And if it goes a little bit higher, then maybe you can take even the higher end of this particular band. So, but more or less it is, range bound, and the volatility is high. So this is the best time if someone is very happy to lose money, right? I'll repeat. If someone is really happy to lose money, this is the best time. Why? Because if there is a crash, suppose we close below this 16,800 or 16,700, yes, prices will collapse, prices will correct, okay? And prices will come down. But that is okay. Losing money in a correction is not very, very easy, because people who are professional traders, people who have trading setups with them, they will obviously exit their long positions with a trailing stop loss, and a few traders who are short-term swing traders might also go short and make money. But when the market is in range, it is very difficult to understand which way the prices are going to flow. So I would just advise all of you, trade as less as possible and deploy less than normal what you have been deploying. If you're deploying, say, if your portfolio size is, say, just on abrupt 10 lakh rupees, if you're deploying, say, 1 lakh rupees per stock, try to deploy only 50,000. If you don't make money just for a few days when the volatility is high, kuch farak nahi padne wala. And one more thing, when volatility is high, the risk is high, plus the profitability is also high. So even if you deploy less, you'll still make you'll still make more, and you will still lose more. So there is no point of deploying the normal rate of deployment which you normally do in a proper bull run or a correction, even when the volatility is not very, very high. And even if the volatility is high and when the markets are coming down, which we saw over here, at least we had a direction over here that the trend is down, you can go short, can make money, cover your shorts when the prices will go down. But over here, we are locked in a range. So don't try to do that mistake. Trade very, very wisely and trade less. Bank Nifty Futures. Now, this is one of the sectors. There are two sectors which I'll share with all of you. There are two sectors which are holding on the market, which are outperforming the market. If you check Nifty Futures in the recent move, if you check the overall chart, especially over here, this particular fall has been vertical thanks to the IT index. But if you check the banking, it has been not a very flat, not a very vertical correction. In fact, it has been a little bit sideways and then it has come down. And plus it took support over here from the 50% retracement and it bounced beautifully. Only thing is that it needs to close possibly above 38,600, 38,700 for a decent move on the upside. This is what we need to understand. If you look at the private banking index, again, it is looking okay. It's looking fine. If you look at the weekly chart also, I think prices are in an uptrend, but the momentum is flat. I mean, prices are going nowhere since last couple of weeks. They're just sideways. But overall, it's looking fine. Only thing is it needs to close above this trend line. And in private banking space, there are a couple of banks. Obviously, one was ICICI Bank. It's still consolidating. It's still consolidating. It is sideways. It probably needs to close above this 816 or 820 mark to go higher. And second one has already shot up, I guess. And that's Axis Bank. It has gone up very beautifully. You can see this hammer. You can see two big green candles. So this particular stock is already outperforming. PSU Banks is again outperforming everything else. It is outperforming its bigger brother, the Bank Nifty itself, because Bank Nifty has not been able to surpass its resistance, but PSU Banks have been able to do. And I think last week or when, in the 25th of Jan, the video which I made, in that video itself, I had told auto and PSU banking index, these are the two indexes which might outperform, and we did see a very decent move in PSU banking space. So you can see already this particular index is outperforming. Obviously, then the stock which I would look at is going to be SBI, which is already doing pretty fine. Okay. So you can keep this particular stock in your list for a swing trade if at all market turns out to be positive and things go green. Metals. Now, metals is something which I would like to avoid for some time. And the reason for that is if you just look at the monthly time frame chart, overall, you can see all of the candles, just one big red candle. And after that, majority of the candles are having very tiny real bodies. These couple of candles are hanging man. This is an shooting star. This is a bearish belt hold. If this bearish belt hold closes below the low of this particular candle somewhere over here, I think prices might correct. Again, this is sort of a shooting star, but is not exactly a shooting star. This one is again a shooting star. So there is some sort of weakness, yes, in I think the metal pack, but the support is not able to break, and that is the reason prices are not able to come down. Maybe once the support cracks and it closes below the support, we'll find out very soon that our price is coming down or not. So as of now, I'll not be very much interested until and unless we have a clear direction, because some days back this particular breakout happened and then it proved to be a false breakout and prices started coming down. So let's wait and watch what happens in this particular pack. Auto pack is outperforming the market just like the PSU bank. It's looking pretty fine. You can see this rally took a dip. It took support from this previous high and it started going up. So one stock I think all of us know is Maruti. I have I think shared about this previously in few of my videos. If you check on the YouTube channel, you will find I had clearly told that Maruti might outperform. And apart from this, there is one more stock, Tata Motors. This is looking good, but I think it will need to close above this particular today's high, 509, 510. Then might be we'll be able to see some sort of rally coming up. So Tata Motors and Maruti, these are the two stocks which you can keep your eye on. All right. Don't just jump in and buy just because I have told you, because you need to be very, very careful, because on 1st of Feb, after the market, we'll be having a budget. And after the budget, we don't know how markets are going to open on Tuesday. So be very, very cautious in your approach. I'm not saying don't trade. Today also I took a trading position, but I have deployed very less amount of money. If I lose, if my stops get triggered, I'll just lose possibly 1% of my corpus in that trading position. All right. So financial sector, we can see the trend is flat. There is some sort of hammer which is trying to, getting formed over here. And if I check the daily chart, it is something else. I think what we can see, prices want to go down, but some sort of support is coming up. So I think we need to wait and watch and see what happens. Currently, it's very difficult to judge and take decision, because if the supports break and close below this lower band and possibly this wicks, then we'll see some sort of correction till this 16,580 or something. And if there is a bounce back, again, that bounce back is absolutely futile. It's no use until and unless we close above this particular trend line, which I think prices are already facing difficulty to cross this particular trend line. So we need to wait and watch and do nothing as of now. IT index. Now, this is one particular index which I would tell you to stay away from for next few days, next few weeks, and maybe even next few months. So I don't know what's going to happen later on in the index, but the current juncture at which IT index is, yes, I can see that there is a trend line support. There is a Fibonacci support. I'm not saying that prices will break that. Okay. But overall state of the trend itself and the state of trend are two different things. So the state of trend is not looking good. And we can see that the RSI is pretty much oversold. The prices are away from the moving averages. And in case if there is a bounce back, which happens, I will not be surprised. but I think this bounce back must be used for swing shorts rather than going long in this particular sector. Be very, very smart to pick your stock. Don't just jump into the IT pack and just use any stock for going short. Be very, very smart in your picks. Pharma. Now, what has happened in pharma is, if you check the weekly time frame, there was a very nice bounce over here. And from this bounce, it did seem that prices will go higher. It was looking very positive, and suddenly everything started coming down. And now again, we are at a support. So this is generally a nature of pharma. Pharma is not a type of an index which will move with high momentum. So that is what we need to understand. And now what has happened is, along with this band, prices are trading at a Fibonacci extension support, which is accompanied with this previous high. So I think this entire band from 13,140 to 12,740, this is entirely a support band. And if you look at the monthly time frame, this is one hammer, this is this is a hanging man, this is also a hanging man. And I think, if I'm not wrong, prices have been almost been able to close below the highs of this particular hanging man, which is a negative sign. So if this support is also broken, then we'll need to see what happens. Chances are prices will drag down. So you need to be careful about that. FMCG pack. FMCG pack, we can see it has been underperforming since a pretty long time. And what we can see over here is this support was respected. It did not touch, the prices did not touch over here, but it did sense that some sort of support is there, and the prices bounced, and again it started coming down, and this time even a stronger hammer is built. But just with a hammer, we cannot say that the entire market will bottom out. It may or it may not. So we need to wait and watch and see how price pans out and what type of price formations do happen at this particular juncture. All right. So we need to be very, very careful and watchful over here. Don't just jump onto trades and start picking your stocks. Be very, very careful and wait patiently, because if this support breaks, we need to understand that if this support breaks and closes below this, then the next support is pretty much down over here. So we need to be very, very careful. Realty pack. Now, in the realty pack, again, what is happening is it's similar to FMCG pack, but it is much stronger than FMCG pack. You can see a hammer over here, and this is sort of hammer. It looks like a hammer, but it is not. But I think what is happening is that this is a very huge candle. This is a very, very big green candle. If you compare this green candle with all other candles within the span of last couple of years, this will be the biggest. So the midpoint of this particular candle is actually providing support, and it is such a strong support that even the prices don't need to touch the Fibonacci retracement. So this entire band from 450, 454 till 432, this entire band is a support. In the weekly chart, we can clearly see that the trend is flat, and in the daily chart, it's difficult to say, because what is happening is the daily chart support band has been broken. As per the daily chart, the support band has been broken. We have closed below this. Again, we are trying to bounce from this particular band, and we are more or less within a range, and it is a very, very small range. The range starts from here. The resistance band is the entire resistance band, and the support band is somewhere over here. So it's very difficult to decide as of now. So let's leave it. Let the price decide, rather than we trying to, predict where the price is trying to go. So let's not do that. Let's wait patiently and see how the price action pans out. And once we have a breakout or a breakdown, then we'll automatically come to know, and we can trade in that particular direction. Consumer pack. Consumer pack, again, one more, I think, example where we can see that the trend is flat and the prices are trying to bounce from a Fibonacci retracement where the previous highs, previous lows were. But again, after these lows, we need to understand how price pans out over here. This is very, very important because what has happened is this was a high, then we had a new high over here, fine, and we had a negative divergence over here in RSI and prices collapsed. If this was a very strong uptrend, okay, because I had high hopes on consumer index previously before this short-term collapse happened. If this was a very strong index, then possibly the low would not have come to this particular low. It would have stayed somewhere over here. Because generally, as per Dow theory, when the current low comes near to the previous low, this is a sign that possibly prices will consolidate and go sideways. And if that does not happen, the second option is price can close below this. And if that happens, prices will start coming down, will start tumbling down. So I think let's leave on the price and let the price decide what it wants to do. As of now, there is still a question. We don't know what can happen over here. So let's wait patiently and we'll come to know very, very soon. After the budget day, we'll have a very big move. So we'll understand what happens and maybe after that we can decide. Mid-cap index. So I think there are so many examples today where we can see that prices, we can see there is a hammer almost at the same level. The trend is flat. I think 3 to 4 indexes which we could see today. And again, over here, you can see the prices have closed below the resistance band over here. Basically, this is actually a support band, which is now turned into a resistance band, because what you can see over here is prices have been able to form a shooting star candle, and the high of the today's high is exactly the upper band of this particular sideways resistance band. So this is a sort of you can see an example where prices are again oscillating between support and resistance. Same thing is happening in Nifty Futures. And if you compare this to the last index. So overall market is actually choppy. We are within a range. Trading in this market is very, very dangerous. Trade very, very less. I would say if you're taking, say, 8 trades in a month, just initiate 1 or 2 trades. Reduce your trading number of trades by at least 75%, come down to 20-25%. And in that 25% also, reduce your position size by 50%. यानी कि अगर आपके पास 100 रुपीज है तो ट्रेड ओनली विद 11 or 12 रुपीज. दैट ये टाइम आ गया है मार्केट में. So making money in this market is not going to be easy. It's going to be exceptionally tough. And even after all the efforts, we might not know that are we going to make money or not. At least for timing. Once the levels break, once we understand where the prices are going to move, north or south, and we have a clear direction, then initiating trades, whether we want to go short, whether we want to go long, all that can be taken care of. So until and unless that does not happen, and especially when we have a very big event like budget coming up, please reduce your position sizing. I'm repeating this 3rd or 4th time in this particular video. And you guys who are watching this video on YouTube, share this video with other traders, especially in last 2 years. I think I'm pretty sure there'll be so many young traders who have come up seeing the rally of the market. Now, this particular type of market is something else. This is not which many of you must have seen in last 2 years. And I hope you agree with this. So share with other traders, share with your fellow traders. They would find this video helpful and it would help them to understand how markets might react. And do share your comments below the video and let me know how did you find the video. Thank you.